By Gautam Duggad, Head of Research, Motilal Oswal Institutional Equities. Gautam, very good to speak with you and great to have you on the channel today. So we're talking about your report where you are gung-ho on PSUs, and that really is an interesting one because you say Indian PSUs are back with a vengeance. My question is, when were they out of style?
Oh, hi. Good afternoon, Tamanna. Pleasure to be here. They were out of style for large part of the decade. It's only in the last 2 years that you have seen some life back in PSUs. Actually, if you see the index of BSE PSU, you'll be surprised to know that the index went virtually nowhere for 6-7 years. It was struggling around 6,300 or somewhere close to that 6,500 marks for almost 7 years. So zero return, right? And rightly so, because your PSU profitability, the way we track it, the sum total of PSU profits in India, they were also very flattish. In fact, if I remember well, in 2014, they had a profit of about 1.5 trillion rupees, and somewhere closer to FY20 also, their profit was 1.2 trillion. So for 6 years, the profit went nowhere. For 6-7 years, the PSU index went nowhere. It's last 3 years, and particularly FY24, where you have seen a very sharp movement. Again, if we track the same operating data points, the profitability of the PSU pack, it has improved from 1.5 trillion somewhere in FY 20 odd to almost 5.5 trillion in FY24. So last 5 years, the PSU pack has given a profit CAGR of 34%. And the market cap, which is basically the index level also, if you look at, has by and large tracked that. So if you look at the PSU market cap, it is compounded somewhere closer to 45% in the similar period of 5 years. So yes, from the bottom, it looks very exciting because at the bottom in FY20, the market cap of the entire PSU pack was just about 11 trillion. Today, in June 24, we are talking about a 69 trillion market cap. So up almost 6.1 times in last 4 years. But if you see the last 10 years, things normalizes because on a 10-year basis, the PSU index is still underperforming the Nifty, but that doesn't tell you the complete story. Because in that 10 years, there are first 5 years where it has given a negative 3% CAGR. But the last 5 years, you have seen a 45% odd kind of a CAGR. And within that, FY24 was a blowout year where profits went high from 3.8 trillion to almost 5.5. So close to 45% kind of a growth in profitability also. And the PSU index itself went from close to 9,500 levels to almost 18,000 on a closing basis in FY24. Of course, we are closer to 21,500 now on the BSE PSU index. So that basically tells you how sharp the last 2-3 years have been in terms of profitability, in terms of the market cap evolution, in terms of how the market started recognizing them. In fact, today, after hovering in a very low band of 10-11% as a market cap as a percentage of GDP for PSU only. Yeah. So if you look at the PSU market cap as a percentage of GDP, it's hovering around 11-13% for a very long period.
Right.
Today it has reached 22%. So, in a way, market has been recognizing them for the strong underlying profitability.
I agree completely, Gautam, but which is why my first question is, when were they gone? From the perspective of at least the last 2 years, they have been the flavor of the season. So let me, and a long season. So let me make it a little forward-looking, because even though I think most market participants recognize all the factors you've talked about in your report, which is cleaning up of balance sheet, better performance, political stability, make in India, localization push, etc., one is concerned about the level of run-up and valuations. So let's address that first.
So valuation, Tamanna, let me dissect it for you. So today the total valuation or total market cap of PSU is 69 lakh crores, which is 69 trillion. The delivered profit, and we are talking about profit which has already come from which dividends have been paid to the shareholders. So as of FY24, the delivered profit is 5.5 lakh crores. Now, if you do the maths, when you look at the BSE PSU index, the P is 12.8x, right? Is it higher than where it was 5 years back? The answer is yes. But is it prohibitively expensive? The answer is no, because it is still trading at a 35 to 37% discount to Nifty. Now, underlying balance sheet cash flow profitability improvement has been immense. In fact, the ROE itself, which is one of the very important factor which goes into valuation, which was languishing at 5-6% back in FY18, the ROE is 17.5% now. So you have to look at valuation in a little more granular way, because at an index level, the valuations for PSUs are still very, very cheap. Yes, there are expensive valuations in pockets like railways, pocket like defense, but PSU banks are still very cheap, despite very sharp improvement in profitability, sharp improvement in ROEs. The valuations of OMCs, oil and gas PSUs, utility PSUs, the PSUs belonging to the metal basket like Coal India and all, they're still very cheap in my view. So just because they've run up, one does feel taken aback, because the run up has been very sharp. As I said, the market cap itself from the bottom is up 6.1x in last 4 years. But that has been the case for profits also. If you look at the last 5 years, profit itself has gone up from 1.5 lakh crore to 5.5 lakh crore. So you have to look at valuations and the run up in the context of the underlying improvement in their profitability.
Gautam, good afternoon. Niraj here. I see, so one can understand that the valuations in defense are expensive. They may not make the cut. But some others, let's say power financiers, for example, wherein the profit growth has been pretty strong too. The valuation is still not egregious. They don't feature in the list of your key stocks. Why so?
So that's because we still don't have a rating on them.
Okay.
So we've in our ideas, we've included only those stocks where we have a coverage and where we have a rating.
Okay.
Right? In our total profitability pool of PSUs, we have taken all PSUs because that's a delivered number.
Okay. So once the rating comes in, maybe they come in, maybe they don't. Okay, fair call.
Of course.
Now, just trying to understand, it's a subset of stocks which you like are essentially the large caps. Is that a factor of the fact that mid caps are also looking a bit expensive, or is this a natural process of that space that you like plus what the valuations are showing?
So, Niraj, if you see the table in one of the tables in that report, we have given the top 25 PSU stocks in the descending order of their market cap. So the 25th PSU has a market cap of, I think, 1.1 or 1.2 lakh crores. So let me be honest, there are very few PSU mid caps which are there, which we cover, right? Because we still don't have a coverage on railways, power financing companies, or defense for that matter. So large part of the PSUs we cover, they already are large caps. So which is why when you look at our ideas that feature in the report, they predominantly belong to the large cap basket. So whether it is an SBI or a Coal India or any other name that you pick up, it invariably is a large cap. And in fact, if the market cap at an index level is of 6x, you will rarely find if you're lucky, you will find very few small caps there. It's largely largish mid caps and large caps, which basically populate the PSU baskets.
Now, in some cases, Gautam, just playing devil's advocate here, and I completely agree with the basic hypothesis of why PSUs are so attractive. Does the minuscule free float, or in some cases, very little free float, concern you at all? Because this is something that a lot of investors don't take into account. And the fact that at the end of the day, as public sector companies, the government may and could call upon them for whatever it needs. Is that now a concern that's completely out of the window? Because that is what bogged down PSUs for the large part of the decade.
Absolutely, Tamanna. The liquidity or the free float is obviously, one has to be very cognizant of it when one is making an investment decision, because this is very bottoms up, which stock you like, which sector you like, how's that company placed on free float metrics. So that call one has to take at a very bottoms up level. As regards, I think you were talking about divestment, right? Government coming in and selling some stake also. That can increase the supply.
You could sell stake. You could also, so for example, if I talk about your oil marketing companies, before an election, even if crude prices go up, oil marketing companies will not be allowed to pass them on. I mean, honestly speaking. So the fact is that the government is the owner. and decisions will not always be made thinking about shareholders. It will also be made for a lot of policy and political related decisions. That's been the big overhang for PSUs. I understand it has receded, but it hasn't disappeared. That's the point I'm making.
Tamanna, so that overhang will never disappear, right? It will never recede because the ultimate owner will always be Government of India. And you are right, they can take decisions which in the short term may not, seem palatable to minority investors. But that's the nature of the beast when you are investing in PSUs. So that government will always have the interest of the broader population at its heart versus just minority shareholders in the listed PSUs. And that we have seen play out in the last 10, 20 years in different ways and means. So that factor you have to always keep in mind, and which is why the PSUs never trade at a valuation which are commensurate with the private counterparts, right? So today also, like Neeraj was saying, stocks have run up, index has run up, market caps have run up, but they're still trading at 12.8 times, right? And they're trading at 12.8 times at an index level on a delivered profit, or close to 13.5 times. So that concern is already baked into the valuations. That's what I'm trying to say.
Got it. Gautam, I have one specific question on a particular pocket, and I think you could argue oil and gas at large, but a stock like BPCL, for example, in particular, the rank in the PSU universe over the years has actually deteriorated, in which case we've seen other PSUs outperform oil and gas PSUs by a significant margin. Can you make a legitimate case that they can now outperform, or is it difficult to say because of the tailwinds or headwinds of the sector?
Neeraj, you're right. It is extremely difficult, not difficult. It's very difficult to predict the market cap movements intra-PSU basket. But yes, the market cap ranks have come up because the other spaces within the PSUs have performed far better. If you look at the profit evolution of PSU banks, 5 years back, that is, I think, FY19 or maybe FY18, they made a cumulative loss of 30,000 crores. In FY24, they delivered a profit of 1.2 lakh crores. That is how sharp the improvement in PSU profitability in the banking sector has been. Where there was a loss, so question of ROE didn't even arise. Today, an elephant like SBI is doing an ROE of 20% with the ROA of 1.1%. So it's quite natural to expect a faster re-rating in some of those high beta PSU financials vis-a-vis other spaces. Second, to answer your specific query on OMC PSUs, they are always at the mercy of the underlying crude prices, right? So therefore, the inherent volatility and consequently the structural multiple that you can apply to them, or the multiple at which they usually trade, it will always be in a very tight range. So unless you see a very sharp improvement in profitability or a significant drop in crude oil prices, which is not happening currently, we are in a nice, decent range of 75, 85. So unless that happens, you don't see very significant market cap accretion to those names. Of course, the policy level decisions on divestment, they can play a huge role, but those are things which you cannot predict. So whatever is in the realm of prediction, it suggests that insofar as the multiples, insofar as the profitability is concerned, the PSU banks have a slightly better head start versus the oil and gas PSUs.
Got it. Gautam, nice note. Good to put some numbers into perspective. At times get the narrative. The narrative suggests that things have run up too much, but maybe the valuations for some of these are still okay. Thanks for sharing these insights with us, Gautam.
Just to conclude that point, yes, we are, by no stretch of imagination, I am saying that valuations have not run up in some pockets. Clearly, they have run up a lot, where companies which used to trade at a multiple of 14, 15 times, today they are trading at 35, 45 times.
Sure, yeah.
Right? But yeah, I mean, there are segments within PSU which are still trading at a very reasonable range of valuations, given that the underlying profitability itself has been has seen such a significant improvement.
Yeah, most certainly. And actually, while they haven't ranked it, some of the power financiers also fit that bill. Maybe when they rank them, who knows, they could feature in this list too. But Gautam, thanks for bringing those to us. The top ideas from Motilal Oswal, SBI, Coal India, GAIL, and HPCL amongst 4 of those 5 names that Motilal Oswal seems to like.